Now, last time we spoke, Alan, Bitcoin was at 64,000, and we were saying, if we lost some daily support levels to watch out. Well, I don't know that either of us really expected what happened to happen. But since that, there's been a lot of developments, and you've made your way over there and get settled in. So what we want to start with is just to ask you to, if you'd give us an update on Ethereum, your Ethereum charts, and then namely, I think the topic of the month is EIP-1559.
Yeah, sure. So thanks for having me back. It's yeah, a lot has happened since we last spoke. Obviously, I'm sat here with a little bit of Dalian behind me, slightly different to the sat in my little office in Bristol. Yeah, so much has gone on there, which is probably for another day. But yeah, amazing to be here. Sort of privileged to be here at the moment. It's obviously a crazy time still for a lot of people around the world. So yeah, so we were sat at 64K Bitcoin, chart looking bullish, I think, when we spoke before. Don't think we expected 55% capitulation, Ethereum off 60%. Some of these other coins came off, what, 80%, 85%. I think there was some real small stuff, 90%. Right. I mean, that's a sort of like bear market crash at that point. But obviously we are seeing a recovery now. And as you say, the thing is, things have not stopped building. These projects have not suddenly become different because of all this volatility in the market. And I think, as we've said within the CTM community, Jordan talks about it every day, you've got to expect the unexpected and volatility in crypto. So seeing such a big correction is one of those sort of lessons for everyone who's perhaps in the first cycle, that when it decides to correct, it will correct wherever it wants to go, and you've got to deal with it. Obviously, for those who've holed away through all of this, then things look a lot more positive now than perhaps they did when it's breaking down off 30,000 and the chart is extremely bearish. But we have found a floor, and I think a floor, Ethereum made a nice double bottom. There's other things that look good in terms of seeing a recovery. So, but yeah, very different. I mean, quite crazy, really. We almost like picked the top, making that video, so we don't take another top.
At the very top.
Indeed. So yeah, so Ethereum's been certainly interesting. It's been a very successful implementation of EIP-1559. It's done what it was expected to do. Obviously, a lot of people talk about execution risk with Ethereum, although I think everybody, you work in IT, people overblow execution risk quite often. Certainly, if you can see that things are well tested, your execution risk is very well managed generally in projects. I mean, you never know when you go live. Clearly, one of the things if you've watched any of the technical metrics, is that it's taken time for people to start using the actual revised transaction types and things within Ethereum. But because it was backwards compatible, obviously people didn't have to make any more changes than they absolutely had to during implementation. So it's been very smooth. And we're now seeing the burn, and that's sort of precursor to proof of stake for Ethereum. We're already seeing some minutes, some hours with blocks where there's actually supply deflation. So I think we've seen some NFT drops. We've seen some big things which have really, caused a lot of. I think we had 2,000 gas again at one point recently, where there was sort of crazy stuff going on layer one. And since we last spoke as well, looking at scaling and things, we've seen an awful lot of progress on layer two. We've seen some big projects on Ethereum now operating on layer two. Some particularly, if we look past the ZK roll up into the Polygon space, their transaction numbers are extremely high and still growing. So I think we're seeing that usage of Ethereum continue to go up and up and up, and that has to be bullish. And I think if we mix that with proof of stake, you've spoken about proof of stake yourself considerably, because obviously other projects are using proof of stake. But I can't be anything other than bullish for Ethereum. And I think if you look at the performance of Bitcoin versus Ethereum, Ethereum's done extremely well in this bull run, dramatically outperforming Bitcoin, and it's hard to see that changing. The charts, ETH BTC looks bullish. And whatever happens short term, yeah, looking good. So I don't know if we want to flip to have a look at the charts. I can do So we'll see if that's come through for you.
Yep, looks good.
Good. So yeah, obviously slightly different to where we were before, but yeah, obviously 3,000 Ethereum. It's hard to be sort of particularly pessimistic with 3,000 Ethereum.
Right.
Obviously, we have seen here this quite amazing capitulation in one day, and then obviously we've worked and really found what looks like a pretty good floor here, and then we've made our way back up to, you know, what was the floor of this almost like real blow off top that we got, and this sort of base of this on the daily, and we've struggled to get past that. At the same point, Bitcoin's hit a lot of resistance around, again, a big weekly resistance there. So we seem to be consolidating. I have this upward channel here that's been here for a long time, and we're back in there. So, you know, if we do see a bit of a correction here, continued pressure down, I think we're down 11% now. We've come off the top. Plenty of support below here. So, you know, a 30% would take us back to 23 weekly. So, but bullish. I think ETH BTC for me, you know, this is the latest sort of triangle. But if we zoom it out, and I've been, you know, we've been looking at this in the CTM community all the way through. That's a big old multi-year wedge.
Right. Big breakout.
Yeah, we've got a breakout. We've now got another sort of consolidation pattern. That looks bullish, and I've sort of cheekily got the flippening level at the top of this chart. But I think for, you know, there are many people bullish in the Ethereum community who are looking up here.
I don't realize that the flippening happened that quickly. So the all-time high last time got really close to flipping. Wow.
Yeah, I mean, obviously different supply numbers and whatever, because obviously it's been issuing all the way through these years with Ethereum. But that was my rough calculation. Again, some people may say that's right. We got a lot more supply with Ethereum. We got 120 million roughly of supply out there. So market cap wise, yeah, I mean, you've got the ratio in supply there. So if we look quickly at a tweet here from, you know, Crypto Wolf was one of those guys on Twitter that's very pro Ethereum. He's looking at this as an inverse head and shoulders, you know, very, very bullish on where ETH BTC is going here. So
interesting.
You know, whether I like head and shoulders patterns, I don't know. Obviously CTM schooled on head and shoulders being a not the greatest pattern, but this could be sort of cup and handle type pattern here. If this comes up, comes down, and then and yeah, you know, I'm bullish Ethereum. I think I am long term, but yeah, I'm also not a maximalist in terms of I hold 50-50 against Bitcoin. You know, we don't know what's going to happen, and Bitcoin's narrative is still extremely strong. So
yeah, I just now noticed the giant cup and handle. I hadn't seen that before, but yeah, it's if you zoom way out back to 2018, you got a gargantuan cup and handle on the chart.
You start coming up and down, and yeah, it's yeah, a lot of people very bullish, but yeah, I mean, it's very hard when you look forward with proof of stake and you look at the deflating supply. That really, you know, if you take that core narrative of Bitcoin that the hard cap's like going to keep pushing the price up, well, that can equally work on Ethereum and push the price up. So, you know, I'm very bullish with Ethereum. I wonder whether I hold enough Ethereum. I always say that. I've sort of put it on Twitter enough times. You know, don't have enough Ethereum.
Right.
It's yeah, it looks bullish. So I think people get in the short term, don't they, Brandon? And it can always pull back in the short term. You don't know in crypto. If we get another big correction on Bitcoin, everything sells off harder than Bitcoin generally. So you know, we could see a correction, but you know, this chart just looks crazy bullish. So
oh, Alan, so I do have another question. I think, you know, and generally the audience is going to want to understand more about EIP-1559. I know everybody's probably heard about the burning of the Ethereum. So can you explain, I see you've got pulled up here. Can you really explain what's happening when Ethereum gets burned, what that means, and what's the mechanism behind that?
Sure. So So EIP-1559 changed quite a number of things within Ethereum. Obviously, I'm a small scale Ethereum miner, and previously, every time a transaction was posted into the blockchain and the fee was paid, the gas that everybody talks about, that reward was given to the miner. So as a miner, when gas went up to 2,000, as it did recently, that was like happy days because suddenly the profit from mining went up and up. But it also meant that all that Ethereum was going to the miners, and miners tend to sell their Ethereum, putting sell pressure on the price. So what EIP 1559 has done is taken that fee and burned it instead. So whilst there are still, there's still a new issuance, a block reward, which is given to miners, and you can put a tip on a transaction if you're desperate for your transaction to perhaps be prioritized. But primarily, it's taken all of that reward, if you like, the gas that was going to the miners, and it's burning it, destroying it. So far, we've seen here, we've got 62,000 ETH that have been burned already. And I think the power of obviously 3.2 ETH a minute, it says on this chart, which is pretty crazy. And once we get to proof of stake, I mean, the key thing is the issuance drops right down for Ethereum, meaning that this becomes deflationary. So the total amount of Ethereum is going to start dropping. And what I think I like about this mechanism is that the more demand there is for layer one block space, the more burn there is. I think that's quite a cute part of the design. So, what was always a negative in Ethereum, that, there's too much demand for layer one and gas is high, etc. Assuming that the transactions that don't need to be on layer one go to layer two, then you've actually got useful transactions. You've got gas being paid where gas needs to be paid, and you've got that inflating the supply, increasing the price of Ethereum. So I think as a development, that's extremely positive for Ethereum. I think it's clever. I think it's worth pointing out, it was in, I think, Vitalik, it was published way back when at the start of Ethereum. Many of these ideas, they're not, people think they've just come along in the interim and they've just made them up as they went along. This was all part of the roadmap. And what we're seeing is Ethereum delivering that, the developers delivering that roadmap. And, these things take time. They're not simple, these changes, particularly, if you're delivering, we talked about this last time a little bit, but if you're delivering a change in an empty chain, your risk is pretty low. If you mess it up, you just pause and you fix it. You can't do that with Ethereum. You've got this colossal amount of money settled on Ethereum every minute. So I think they've done a great job with this. It's been successful, and it bodes well for the next couple of updates that are coming down the wire and preparing for proof of stake. So
certainly, yeah, that's a good point too. Is that the last couple of hard forks have gone off? Like I think people don't really appreciate like the work that goes into these, but there've been hundreds of hard forks, hundreds of updates, and there's they continue to take along with minimal impact. Now, I think Berlin had a few little things, but London went off without a hitch, as far as I can tell. That's a big change. So that bodes well, like you said, for proof of stake, which is the next thing coming. I don't know if you want to talk a little bit about proof of stake. And we talked before about this this tweet that we had back and forth. So let's start with just where we're going, where Ethereum is going with proof of stake for just now.
Yeah, I mean, I think from an investor's standpoint, before looking at anything technical, the big changes is drop in issuance. So obviously we can see issuance on here, and we can sort of do a simulate merge, and suddenly issuance is collapsed down to 0.4.
And just to pause, the merge is when the current proof of work chain merges with the proof of stake beacon network. So that merge, that docking, when that's fully merged in, then that's the point that Ethereum flips fully from proof of work to proof of stake. And that's what he just showed, is the difference in issuance per year of the two, going from
and then you've got the burn,
right?
But then your supply growth here is negative,
right?
So so we can see we're burning now. There's a lot of factors in this, like layer one demand, but it's very hard to see layer one demand going away, as some doom mongers have suggested for reasons I don't understand. The other thing with issuance, and it's a point that often comes up in these crazy Twitter tirades between maximalists, but Ethereum's issuance is every time they've adjusted it has gone down. And we're about to see the biggest drop. Almost like they call it a triple halving. It's a massive drop when it goes to proof of stake. It doesn't need all of the issuance that's there today. I mean, Ethereum's policy has always been this minimum necessary issuance, they call it, which is to make sure there's security in the network. Now, switching to proof of stake when you haven't got mining, and you don't need to generate a return for miners, completely changes the economics here. Not only do you don't have that footprint, that physical footprint for mining, but you've switched to running a sort of validator node, which you can run on a very modest piece of hardware, albeit you need 32 ETH, so there's obviously a nice entry fee attached with that now. As people have been pointing out, that's like pushing $100,000 for setting up a validator node.
Right.
Proof of stake's obviously completely different from that perspective, because you haven't got this physical hash rate sort of constraint in the network at that point. So if you get into some of the technical things such as sharding, which has the effect in proof of work of fragmenting the proof of work and the security, you can do a lot more than in the software to be able to deliver those things effectively and safely. So yeah, I mean, I see proof. I'm a fan of proof of stake. The more I look at it, the more I like it compared with proof of work. There's arguments about centralization and decentralization with it, but I think the primary thing that just needs to be avoided is that people don't get lazy with where they host the validator nodes. If everybody puts them in AWS, yes, you've created a huge centralization problem where all the nodes are in one place. But assuming that doesn't happen, I'd be very interested if someone in the military was thinking of disrupting and taking over a Bitcoin mine, quite how they think they would attack that if it was proof of stake. There are many positive sort of spins angles you can take with proof of stake where it looks extremely positive. It's sort of better by design. So no, I have to be bullish about that change. I think there is more execution risk, I have to say, with that change. It is a much bigger change than even the ones we've seen recently.
Right.
But that from testing in IT projects that are very large. I mean, you do more testing when you have more execution risk. You have a lot more test cases. You have a lot more things you do, and
right.
It's hard not to have confidence in the developers who've been extremely competent from everything I've seen so far. And I say that as a developer, I'm always a bit skeptical, I have to say, with things when I look at people making changes. But yeah, so far so good.
Right. Yeah. So I definitely think, and the other thing too is you break it into to essential components. You have teams that are focused on different components, and when it's time to go live, you do a lot of testing leading up to it, but then you do a lot of validation, and you have a lot of eyes, a lot of people looking at different components of it. So it's not like any one person has to make sure that the entire upgrade was successful. There's many people looking at many different parts that are able to validate. And so but it is going to be a big change, so we'll see how well it goes. I imagine it'll go off pretty smoothly, like you said. And software nowadays, software development practice has gotten to be so much more refined, especially with testing and development. So like you said, I'm confident that they'll pull it off without too much of it. There's going to be some wallets out there that have problems, some exchanges that might have, that didn't get something upgraded right. You'll hear about little off cases, but with the core, core ledger, I would imagine it's still going to be ticking along just fine when it's all said and done. But we'll see.
Yeah, and there's a lot of things that don't change and will be fully compatible, and that's the sort of major point. I mean, you can make changes in the node as long as your interfaces are still working and everything's compatible, the EVM's running, then I don't see too many yeah, I don't see too many issues ahead with that. And it's not like proof of stake's new either. I mean, I know you're a big supporter of, Cardano, and we've seen other chains out there that are running proof of stake. It's not like it's something that's never been done ever, and oh my god, it'll it'll collapse. you know,
Right.
it's already out there, and nothing. Ethereum, they're not taking from what I've seen anyway, from the narrative, they're not doing anything particularly aggressive or different with
Right.
their implementation. So,
Yeah, I do. I sympathize with the people that the anti-proof of stake that are concerned about how you'll hear the argument that proof of stake is just what the fiat system is now, and the more coins you have, the more control you have. And that's sensational, and that sounds that maybe can sound convincing, but it's not really too terribly accurate. And you look at how these systems are built. In theory, you can buy your way to a majority ownership of it, but there's a lot more to unpack there. And I think the game theory, people who are concerned about Ethereums and the Cardanos of the world being taken over by a small majority who control everything, their advantage. They're not really looking at a lot of the governance mechanisms that come into play there as well. But it's
yeah,
topic day.
completely, yeah. I mean, obviously, there's another accusation that it's often made that Ethereum's development process is sort of centralized. But if you look at the reality, you can see all the minutes of the calls. One of the things that Ethereum does well is it's got multiple client implementations and multiple client teams that, in effect, have to agree to take the changes, implement the changes, etc. There's a lot of stakeholders involved in those changes as well. So a lot of these centralization arguments don't seem to stack up at all. When you dig through the detail, it's almost become almost like a political thing where if you repeat the lie enough times, people believe it. It's sort of gone down that road. It's all got a bit ridiculous.
So I'm going to share a Twitter exchange that we had. I took over share for a second just to share this.
Yeah.
And I'd like to just get it's down to 140 characters. So Alan, the other thing I wanted to ask you about was on Twitter. We had a little bit of a back and forth, and I'll share that in the video notes below if you guys want to check out the Twitter feed there. So there was a lot of people that on crypto Twitter were commenting about Jason Lowery of the U.S. Space Force. He went on a comment spree about Bitcoin and basically slammed all altcoins, and he made some interesting points. And my comment, I posted somebody else's thoughts on the thread, and I said I love the thread, mostly agree, because of being kind of orange pilled on how money works. And I was kind of transitioned from I was all Ethereum coming into last cycle, mid 2020. I was pretty much all in on Ethereum, but then I moved back to being predominantly Bitcoin because of the money aspect of it. And I said, from a technology perspective, for me, major crypto projects like Ethereum, Cardano, Chainlink, I don't see them myself as direct competition with Bitcoin. I see them as utilities for the services that they provide and the platforms and the massive platforms and what they provide. And I see Bitcoin as what I would call a truly decentralized digital currency, property, gold. And the reason I say it's truly decentralized is because Bitcoin has no founder, no central person or central authority that has a significant say in the project. Now, in theory, I believe that Hal Finney is probably the most likely Satoshi, but Adam Back is the next one right behind him, and he's still around, and he has a lot of say in the Bitcoin community. So that can be debated: is if Satoshi is really gone or if he's still here in the shadows. But your comment, and again on Twitter we have 140 characters to work with, so both of us were trying to truncate a lot of thoughts, and so I want to give you some time to explain, what your thoughts are on this subject. And your comment was, I'm just going to read it, that this is where we diverge. You said the Bitcoin white paper is the foundation of crypto, not the implementation. Otherwise, that's like saying the first operating system with a graphic user interface, or as you said, OS with GUI, but I'll say it for the general audience, operating system with graphic user interface, will always dominate. The market will decide what's most valuable, and there's no guarantee that remains Bitcoin. Now, of course, I would agree with pretty much everything in there, but I'd like you, and so I don't disagree. I do think that Bitcoin might transcend technology because of the mystique around who Satoshi is and everything else. But sans that, take that off the table, and it really is a debatable point because he very well could be here just simply the shadows. The statement that I was most intrigued by is that Bitcoin white paper is the foundation of crypto, not the implementation. I think I know what you mean by that, but I'd like to hear more about that statement and your thoughts around what's developing with Bitcoin in the last few months.
Absolutely. So for me, certainly researching the technology as much as I have, what is blockchain, and having previously for many years worked on databases in different settings. You're an enterprise IT guy. You've come across all the different flavors of databases, and a blockchain and a ledger is in essence a different form of database at its heart. With cryptography applied. I've always seen that the Bitcoin white paper, which is like the design, the design for what we now call crypto, is what to me transcends everything. Projects like Ethereum have built on those ideas, and I think you see the same ideas but different flavors of them. In almost everything inside crypto. The implementation. Well, they've implemented that original design in Bitcoin, but Ethereum is not built on top of Bitcoin, and that's really was my point. It's its own layer one. You've got the layer naught as the bankless guys describe, I think, really well, is people, and layer one you've got the layer one in the blockchain, and Ethereum for me sits in its own world. It's not reliant on Bitcoin, and all the other projects that are layer one are trying to find their own flavor of their own design of this is my take on what would make a good layer one. So for me, it's that white paper that transcends, and everyone's almost like referencing that when they're designing these additional things in the crypto space. Whether Bitcoin is the dominant cryptocurrency, if you want to call it that, going forward, I don't think anybody knows at this stage. We're seeing a lot of PR and a lot of soundbites. I sort of tweeted that to Jordan and said the soundbite is the easy part. You actually got to deliver the currency in practice, and that's hard. So we can again, I can reference enterprise IT to death. I've been sold and pitched enterprise technology solutions forever, and what people do is they overblow all the things and use PR and soundbites everywhere. Normally there's some really nothing piece of technology that's made out to be some really clever thing that's going to change the world. That's how the marketing works in that world. It's globally deployable, and it's all these things, these buzzwords come out, and you can play buzzword bingo and go to those meetings. It's just the way it is. And what I've been trying to get my head around and start to do is to dissect crypto a little bit more and see, well, what is buzzword bingo here, and what is actually got some substance behind it, and where are the real problems in crypto. So that's sort of where I was leaning with that, is that there's this great design, but I don't necessarily think that that's the only thing. I think that design can evolve. There seems to be some maximalism that says, well, that's it, we stopped. I think, well, hey, some of Bitcoin's strengths that people put forward are that it isn't this constantly evolving thing, and that's great. And you can have this implementation of crypto in Bitcoin that's not going to change much over time, and it has all these things defined and set. That's great, but that doesn't guarantee its success. In fact, if the innovators are everywhere else, that actually puts it under pressure. That's what I see. That's how tech is. How many things did we use as a kid, and now they're not even here? That's technology. That's the way it is. And we're seeing it with we talked about Tesla before. We're seeing it with Tesla in automotive and in energy, where innovation just if you've got iterative innovation coming after you, you're not in a great place. That's where you are in business. It's the way it works. Now, that's not to say Bitcoin still isn't new and doesn't have a great narrative. You know, I still hold Bitcoin for that reason. But I would say I don't think you were wrong last year where you were as a tech guy. You know, sometimes, you know, I go back and think, I look at the performance of Ethereum in this bull market so far and think I should have just bought Ethereum. That was almost where my head was. You know, as a tech guy and a developer, I'm looking at it going, I like that as a piece of technology. You know, it's kind of like, and actually, if you look at the usage, you just every metric is almost every single one pretty much is flipped now. You know, some of them are. I saw the fee revenue was, I think, was the other day, was it 56x Ethereum to Bitcoin? I mean, crazy, and that's on the layer one. When you start bringing in all the layer 2 fees, the whole ecosystem fees, the DeFi fees, I don't know what that'll be. It'd be hundreds. So it's crazy. You know?
Yeah.
So that's really where I was with it. Is it's not guaranteed, but obviously there's not a lot of. You don't see any talk of, you know, Ethereum as money bar. Perhaps, you know, the bankless guys here and some of the other guys who are pushing that narrative. It's perhaps a different narrative of store of value versus currency, which I think can be a very different thing.
That's a good point.
And why are people in crypto? I think there are some of us. I have perhaps a different view to some other people on where I see crypto potentially bringing huge benefits to the world. It's not just as a currency. You know, I speak out on things like imperialism and other people's views on the world, you know, without venturing into politics. But it looks like, you know, Bitcoin could be very anti that space. You can't weaponize that, you know, immutable ledger, and you can't block the transactions, etc. You know, you can do some of the things that are almost like abused today to try and keep some people rich, keep some people poor. It's that sort of argument, you know, where it goes beyond. You know, it's all dressed up as a good versus evil argument. These things always are, but it goes beyond that into, you know, it's political posturing and maneuvering, and, you know, actually causes some damage. So I see crypto potentially as a force for good, and I will back Bitcoin all day long if that's what ends up in that space as an opportunity to make a difference. But is it guaranteed to succeed? If people necessarily going to adopt Bitcoin? I don't know. You know, you've been running Lightning and things. You compare that to some of what I see in the Ethereum space, it doesn't look all that great. You know, and we can perhaps touch on some of the news that says the first attempt at implementing a currency in El Salvador is perhaps not going in the direction that some of the PR suggested it was.
Go ahead and share that, please. While you share that, I'm going to give just a little counterpoint, just to keep things kind of in. So, if Bitcoin, if it does survive, we both know. So both of us, I think, you know, if you're watching this, understand that both Alan and I are longtime technologists, and, you know, we kind of just see the general landscape, and it's clear that if Bitcoin doesn't have properties that transcend just the core technology, that Bitcoin plus its layer 2 networks, Sovereign and Lightning and some of these others, it cannot survive in this technology race. We both saw it in the late 90s, early 2000s, the massive disruption. And since then, there have been more disruption, but that was a particularly volatile time where there was a lot of hype around a lot of companies that did nothing. And crypto is going to be the same space. And a lot of the early leaders in certain categories, a few survived. You think of like maybe Xerox and Intel and Microsoft, but many, you know, just were decimated by disruptive forces of innovation. So Bitcoin at this stage, because it hasn't developed as fast as the other platforms, and it's not going to because of its the nature of the ecosystem, it has to have properties outside of the technology that make it endure. And the other part of it is the reason I keep a good portion of my money in Bitcoin is the winds of finance can change quickly. And Bitcoin does have, because it's the largest crypto asset, it does have the potential to again transcend the technology and just be considered a reserve asset. So it can be a reserve asset of crypto, and it could be used as a reserve asset for very large scale things like maybe energy trading, right, or other things. So if it does get large scale adoption as a reserve asset, then all of the limits around, transactions, how much transactions it has and everything else, none of that matters because it's a pegged reserve asset, and its value is going to be pegged to the underlying assets under which it's serving as a reserve asset for. So that's the other kind of part of it. But to your point, if it doesn't have properties that the market and at large if the market at large doesn't agree that it has properties that transcend, the technology gaps it has, then something will eventually eclipse it. But yeah, so you brought up your news here about El Salvador, and let's dive into this.
Yeah, I mean, this is very new. I cross-referenced it as well through one of the other news sites just to have a quick look this morning. But these are draft regulations, and I don't want to get stuck into all of the detail here because it goes on a bit. But the big one is KYC is required for everybody. So, you will not be able to register and use this so-called currency in this country without KYC. And they're saying they must apply money laundering, terrorism, etc., all of these filters to transactions somehow. All of the narrative about Bitcoin is the sort of like the polar opposite of this. This is almost like a CBDC in what this is. And yes, it's got its attributes of its hard cap, etc. This is not bringing in anyone can just create some Bitcoin and use it as a currency, which is what I think a lot of the original ideas were, that there was this real freedom attached to it.
Right.
And I think this, whatever the detail, this will evolve. I mean, this is a draft, but it sort of goes to show that these mechanisms that we have in finance are not just going to go away, and it's going to be hard to make any sort of transition to make an actual useful currency, because there's just going to be pressure to apply the controls that are there today. I think I don't know everything about El Salvador, but I have said, obviously they're a US dollar based country using the US dollar at the moment, I believe. So they're going to be in this sort of quandary of what do we do, because if we upset the US, there's all these problems, and then So we're starting to see this play out, and when I think one of the bigger countries perhaps is looking at this again, we'll see all these debates come out. We've seen it in the regulation arguments in the US in the last couple of weeks, where we're trying to impose traditional financial controls, and it just becomes a political point then, and again it just becomes complex and difficult at that point, because the politicians want to apply their sanctions, controls, filters, whatever that they think in their eyes are doing some good, and saying, well, you're going to bring in a currency where we can't control anything. Anyone can pay anyone. And we don't like the sound of that. That's the sort of first position. So all I see is a very bumpy road to get to a currency. Whereas if you're using it as a store of value and some of these other things that have been the narrative, digital gold, and gold prices against fiat is all over the place, as sort of crypto assets are. That, I think I understand that a lot more right now. All I can see is this massive can of worms dealing with trying to make an actual currency. That's not to say it won't succeed, but it's a can of worms. Right. You compare that to some of the things we see on Ethereum, stable coins, etc. Some of the things there. What's going to gain adoption first? And then you've got the ECNY, China, which is a crypto implementation. It just happens to be centralized. And you can argue that all this KYC and permission that's been proposed here is centralization. Basically, that's what it is. It's centralization wrapped on top of a decentralized chain. Now you've got to get permission to get into the system. I don't see this idea of winners losers where we started off. I just don't see answers at the moment. Right now, it looks complex to me.
Yeah, and that's a good point. That in technology, sometimes there are winners and losers, and sometimes there's a multiplicity of answers, right? And sometimes the market gravitates toward having a best of breed for a specific, multiple players in the same space that are used for different pockets of solutions. And then sometimes the market gravitates toward a winner takes all dynamics. And so when it comes to crypto, my guess is that we're going to have a very multiplicity. We're going to have a large scale because you've got, platforms and utility. You've got, Oracle space, and you've got, the interop chains, and you've got all kinds of different projects, NFTs, and largely that's all built. The best way to get exposure to most things developing in crypto is to have exposure to the large platforms, namely Ethereum. But at the end of the day, there's going to be a lot of different projects in the space. It's really just a matter of does Bitcoin have properties that the market likes that will endear it, that will make it survive beyond what the technology is that it has brought, right?
Absolutely.
So, and that's the big question. Nobody knows. Nobody knows the answer to that question.
Could say it does, and it can clearly work as a currency in theory. Whether it needs an Ethereum next to it, I mean, I probably lean towards that, to say using Bitcoin and Ethereum. We sort of opened with it last time. You can wrap it up and do an awful lot with it in Ethereum.
Right.
And there's this idea that they're going to build all these layer 2s on Bitcoin. Well, there are a lot of challenges with that. There's some caveats, of course, because Polygon, for example, is a checkpointing layer 2, without getting into too much of the technical, but it's a checkpointing layer 2. It's doing extremely well in terms of adoption and usage. So it's not to say that almost like the pure view, which would be the ZK rollup, is, the ultimate in having full security on layer 1. But yeah, I just don't see the guarantee that we go back to where we started off, that Bitcoin's going to be a currency and it's going to dominate because of that. And then everything ends up on Bitcoin. I don't think we're there yet. I think we're actually a million miles from that. I mean, without diving too much into the politics, it's very hard not to use the US dollar for lots of things right now. There are all sorts of consequences to not using the US dollar. I'm sat here in China. China and Russia are not using the US dollar for lots of things, and you can see the political maneuvering that's going on. All sorts of discrediting and attacking and things going on in the background for some of these shifts. We've seen it in lots of other countries. The idea that everything just goes away and Bitcoin comes along, I just see that as a fantasy. The road from here to there is going to be a very, very hard one. Right. And if it becomes a very US-centric thing, that also brings, some people celebrated the mining moving out of China. Well, we touch on mining quickly. Actually, it being in China was the one place it wasn't really accessible to many Western forces, etc. So there's lots of counter arguments there. If it suddenly becomes another very US-centric or certain country-centric technology that tries to own it, it brings all the same politics with it. And then you just go down all sorts of rabbit holes that, again, you're trying to, global adoption suddenly looks very, very hard. And, will it replace then the Western currencies? There's all sorts of potential threads you can follow then as to what happens. Do we get we see it in CTM talk about the reset and all these ideas when, if the currencies fail, who knows? But that's a massive rabbit hole and just full of politics. So, it's just, this was sort of all this triumphalism about, El Salvador's got a new currency. Well, yes, it sort of has, but goodness me, it's difficult to deliver.
Right.
So yeah, and if we want to touch quickly on another article, that something that's very precious to me, and we talked about carbon before and climate change.
Sure.
It's another thing that Bitcoin, I think, has to deal with over time. And I think what proof of stake is going to do, as we've talked about, is just ask an awful lot of awkward questions. I called out quite a lot of the narrative that people went after Elon Musk when he just asked the same awkward question, which is, okay, if this carbon footprint swells or shrinks with the price, as this particular article is talking about here, if this thing goes right up to 500,000 or whatever you think it's going to do over time, you're going to be spewing an awful lot of carbon everywhere at that point. And the headlines in this article is that some Bitcoin will be spewing carbon that's beyond some very large countries by that point, based on the way that the amount of mining that takes place is tends to be aligned with the price. So I just see this as a very awkward question, particularly as climate change becomes ever increasingly a big political subject and is now being dealt with. You can see it's on the agenda in the infrastructure bill in the US. It's certainly on the agenda here in China, where we're seeing a transition that's much faster than I think people realise.
Right.
I think it's just not a. I've said it on Twitter. It's just not a place that I think you really want to be. You're up against this huge movement to transition with this. You can run a mine as you're trying to and say, okay, I'm going to run it all on green energy, which is great. But what we're seeing in practice, if you dig through the headlines, is in behind that, people are switching off fossil fuels because they're switching on renewables, and Bitcoin mining potentially is a place to use those fossil fuel plants because you can now get a return from them. And it's creating this very negative narrative, and that just looks like a bad place to be to me. It just like, if you were going to pick somewhere to be, I wouldn't pick being on the wrong side of the climate change debate as a place I'd start off right now. It's like, that's not a great place to be. So I just think it's going to need answering over time.
Absolutely. In my case, I'm working on building out a solar farm and mining facilities on some land that we own in Texas. And I do have a small proof of concept that I'm doing here in my personal home with some solar install that we've got going up on the roof. But at the end of the day, those solar panels, if I'm not buying them, putting them out in a field to connect to a shed. But at night, my mining equipment will run on solar during the day, but at nighttime, I'm going to use grid power, right? And I'm going to try to optimize it to where I pay less at night, when the truth is the grid is less busy at night because it's really hot in Texas. So I'm going to run my miners on solar during the day and not tax the grid when it's being taxed, and then use it. But I'm going to use power at night that otherwise could have been spun down, and then I'm going to use solar power in the day that could have been used elsewhere. That's the truth about proof of work mining, is that yes, even if it does use renewable energy, it's still using energy that could be used somewhere else potentially. So
that is
a lot of cases, not in all cases.
Counter argument. Yeah.
And so there are lots of energy sources that are just too far from areas that it doesn't make sense to produce energy from them, and you can maybe use those sources of energy. So there's a counterpoint. The other kind of counterpoint is, in theory, over time, the mining equipment, hopefully will get more. Obviously, as new equipment comes out, it gets more efficient. It does produce a lot more hashing power for the same watt used. But like you brought out, as the price goes up, more and more chips. Basically, you look at it this way: there's a supply constraint in the global chip production. So many chips can be made every year. And the more that the price that Bitcoin goes up, the more percentage of those chips are going to be used for Bitcoin mining than for other purposes. And Bitcoin mining does tend to use a lot more wattage, per silicon than other usage. But that money will then fuel further ramp up of chip capacity, and that ramp up will continue. So it's definitely a debate worth having, and it's something I'm watching closely. And I think
we'll see how the market prices that in over time, because I think proof of stake starts asking it some big questions, particularly when Ethereum's proof of stake obviously is the number 2 on the market cap list. It'll be interesting to see how that's seen. I mean, I touched on the other point that without being too political with it, but you can also argue that proof of work becomes like oil fields 2.0 when it comes to being possible to either destroy them, to invade and occupy and take them over, and we've seen what that's done around the world over the past sort of 50 years. And I think, that's also a negative look at what this could become. You're talking about the narrative we see is nation states are going to get involved, and we're going to have countries controlling their money creation and all this, which is just like this exponential, huge growth in mining. And then you've got these big physical mines that are sat somewhere. You can't hide them away.
Right.
You know, it's like in China, they could sweep it away so fast because the grid knows where all these mines are. You've got all this massive energy consumption. You know, you can't hide that away.
No.
Raspberry Pi running a validator node, well, I can hide that away. Good luck finding that.
Right.
So there's a sort of there's questions to answer. That's all I would say. I'm not an anti-Bitcoin person, but I'm also someone in technology, and I'm sure you do the same in your career. You have to look at these awkward questions because they don't go away. You know.
Right.
You know, otherwise you're putting your head in the sand, aren't you? I mean, that's not a way to be.
What you see on Twitter and on YouTube a lot is people who are heavily invested in one way or another will make excuses for and find data to back up, what they want to believe. But we're both out there trying to find data that and craft our analysis and our investment portfolio around the data that we are finding, as opposed to trying to find data that fits our preconceived thesis. So thank you, Alan, so much for joining me today. I think this has been a great discussion. We talked about a little bit about proof of stake. The other part of it is the other extreme. So we've been talking a little bit about Bitcoin and where Ethereum's going with proof of stake. But the next thing is the other extreme. We've got a lot of new technology. Sharding is a big topic with Ethereum moving to a fixed shard configuration. You've got several projects that are doing sharding. Zalika was an early one, and then now you've got Elrond doing their adaptive sharding. But you also have these hash-based ledgers. So you've got Nano and Hedera and some of these other IOTA that are these hash-based ledgers, and they have some benefits, but there's a lot of drawbacks too. So maybe next time we have a discussion, what I'd like to do is talk about, dive into proof of stake, the game theory, security and game theory around that, how tokenization works in that model, and then look at the technologies that are now capable when you move to that model, namely sharding. And then we can also kind of compare these new technologies, hash-based ledgers, and trying to run a smart contract platform on top of a hash-based ledger, which is a totally different can of worms to unpack. So next time, let's queue up, and so we're going to have Alan as a try to have more regular discussions now that Alan's settled in over there in China. We'll try to have more regular discussions and have them on more regularly. But thank you so much for your time tonight, Alan. Or tonight, my night, your morning. Thank you so much for joining me. Good morning.
Cheers, Brandon. Cheers, bye-bye.
All right. Thank you, Alan. Take care.